Ladies and gentlemen, today you're going to see a rather spirited panel because we are going to be talking about using ICOs, or initial coin offerings, in Regulation A offerings, which is the Mini-IPO. In other words, combining this new technology of distributed ledger coin offerings with traditional fundraising through IPOs. And so, as you may know, Regulation A is a mini-IPO that allows you to raise up to $50 million in a small IPO. It's designed for new emerging companies. It has some wonderful new advantages in that the Regulation A allows you to test the waters, which means you can go out and ask people, if we do an IPO, would you invest in it? You can actually do that before the IPO, before you file. And you're exempt from the blue sky in the 50 states. I mean, it has some wonderful advantages, and it's being taken advantage of. And recently, several Regulation A offerings have gone straight to NASDAQ. So it's no longer the unloved little stepchild. It's becoming a major tool for companies to gain capital. And with the rise of blockchain and Bitcoin and all the different new coin offerings, that some of which we're going to talk about today, whether some of them are illegal or not, we're combining those two things and talking on this panel about that. And that's all I'm going to say, other than, gentlemen, if you would start with Rod down at the end and introduce yourself and take a couple of minutes and describe briefly what you and your company do, and then we'll begin our question and answer session.
So I'm Rod Turner. I'm president and founder of Manhattan Street Capital. I've had the good fortune to play a key role in building 6 successful startups, 2 of which we took public to the NASDAQ, one being Symantec. I was the head of the group that we acquired, Peter Norton Computing Company, and built that business to scale up Symantec. I've also been a venture capitalist with a good friend of mine, Safi Qureshi. We formed a VC firm in Irvine called Irvine Ventures. And I've been in this space since 2011. When I say this space, I mean generally crowdfunding, figuring it out. So Manhattan Street Capital, we launched in May of 2015, focused on Reg A plus offerings. And now we've adapted the company to include select Reg D offerings and ICOs that are securities law compliant in the USA. So that's what we do, and we both advise, coach, and assist in all the components involved in these kinds of transactions, whilst not being a broker-dealer, so we have to be very careful what we do and do not do. And we have in our platform a lot of sophisticated technology to increase the efficiency with which we can raise money in these transactions for the companies that we are working with. That's me in a nutshell.
Christian Kamiya. I represent a company, Solid Opinion, which currently is doing its private sale in their initial coin offering. I'm a recuperating attorney from the old world, as you can tell by my accent. And so we're now trying to figure out the token sale game, but we have been at this for some time. Our company has been around for 4 years. We raised traditional venture funds of 7.7 million so far. We have a working platform. We have a couple of million users on that platform. And we have a proven point system on the platform. That is to say, we're already selling, in a way, virtual currency that we are now tokenizing.
Great. This is it working?
Yes. We have one microphone working.
Okay.
Not
This is Jawad Ansari. I'm with Bowser Securities. We are a FINRA SEC licensed broker-dealer, clearing broker-dealer, as well as a transfer agent. We recently became a registered investment advisory firm as well. And we focus on traditional investment banking businesses, like the initial public offerings. See over there, it's kind of getting double. Growth capital raise, fund placement, so on and so forth. In addition to that, from our investment advisory business, we are introducing new products, including a blockchain fund that we will be discussing more later on. But at a high level, we've been involved in this industry from a multitude of different sectors. Previously, my background is on the buy side, running Myvin family office as well as corporate metrics, where we manage the assets of ultra high net worth families, and also on the venture capital side, investing in companies. Some of them are public, including Proofpoint and A10 Networks. So started out my career working at Irvine Ventures, thanks to you, Rod. And that's a little bit about myself. So,
good morning. This one is working. I'm Charles Kaufman. I'm a securities attorney at Homeyer Law, a Los Angeles-based law firm which specializes in crowdfunding, including ICOs, other forms of alternative financing, including EB-5. And one of my partners, Jor Law, is the founder of Verify Investor, which is the largest provider of investor verification services for Title II crowdfunding, 506C offerings. And to date, most of the successful ICOs that have chosen to characterize themselves as securities have used Title II and have used Verify Investor for their investor verification services. So we're very conversant with what's happening in the blockchain industry. I personally began my career at Morrison & Foerster during the IPO booms of the 90s and the aughts, and I've been continuing to practice securities law and representing public companies through the dearth of IPOs, and it's very exciting to see the Jobs Act attempt to get the IPO runway working again, and it does seem to be catching fire, particularly with Reg A+.
And I'm Gene Massey with MediaShares. MediaShares is a company that specializes in live internet broadcasts and video marketing. We did the Lend It live broadcast 3 years in a row, and we've done other events where we guarantee companies an audience of at least 10,000 viewers for your live broadcast. And we also help companies craft their story. If you're marketing your offering to investors online, you have to very carefully craft your story, and we do so in an SEC-compliant manner. So we will get to some really good discussions here, gentlemen. I neglected to bring the boxing gloves, but I think we will see that there's a diversity of opinion on whether or not a coin offering can be used in an IPO. Now, Rod, we have spoken about how you can actually do an ICO in a Reg A offering, and you say that you are doing so. Would you tell us how you are doing that?
So it's possible, that's the main thing. It's not easy, but it's also not remarkably difficult. I think we're probably at the leading edge of those companies that are doing securities compliant Reg A plus ICOs. There's been some already in using Reg D, which we're also doing. We have some companies that are moving forward with ICOs that are Reg D compliant. And it is, whilst challenging, it's not impossible. There are new concepts involved. Gene was mentioning yesterday, Escrow is a challenge. You know, for example, our regular back-end processor has a escrow bank and they won't accept cryptocurrency deposits. I'm not surprised. You know, this is early days for them. Over time, I think that they will. But in the meantime, there are systems in place within ICOs that cover that base. So we're not worried about that.
Let me stop you right there. There's a system in place in a cryptocurrency offering within the offering itself that is SEC compliant and as a custodian, as an escrow?
Well, the escrow isn't the same thing. It's delivered in a different way, but it performs the same function. So an escrow, what is an escrow account? It's a place that you deposit money and only release the money to the right place at the right time when certain circumstances.
But it has to be a FINRA-approved custodian, right? To hold the money, you have to be a FINRA-approved custodian. Is that right, Charles?
Well, it is possible, but difficult if the issuer itself is closing the transactions,
okay,
which can be done under Reg A plus, not usually done.
Okay.
But if the issuer, if you have a registered broker dealer anywhere in the food chain, and in particular closing the deal for you, they're required to use a bank as an escrow agent, and the banking system to date does not allow deposits in Bitcoin.
Okay.
But if you have a way, and I don't know what
Yeah,
Rod's
Rod, go ahead, Rod.
secret sauce is, but if it's.
We interrupted you, but I guess he's explained it, that if you do it with inside the entity itself, then.
Yes,
Okay.
yes, so that's a good point that you just made there, thank you. So in a Reg A plus, there are a number of advantages over other options like Reg D. And one is that the issuer itself can make its own raise without the involvement of a broker-dealer. And there are some downsides to that, of course, not having a broker, I mean. But one of the upsides is that you are not required then to have escrow. We always want our companies to put the money into a deposit before it's released so that we can do the proper checks on the investors so that they don't accidentally issue shares to someone who shouldn't be investing. So we do that anyway, but that covers that base. I don't find that to be one of the more interesting challenges. There are numerous ones. I don't really want to dwell on the challenges as being difficult because and focusing our attention on them. The real point is that the challenges can be overcome, and we're doing that. We're overcoming those issues. There are some significant ones, but the solutions exist. So Reg A plus, I think, is in some ways for smaller raises where smaller means less than 50 million, then Reg A plus is very interesting. And for less than 20 million, especially when most of the money might come from outside the US, then you can do a Tier 1 Regulation A plus offering very, very simply and at less cost and not have to provide an
And a
audit
Tier
to go
1,
in.
for those that are not familiar, it means
Yes.
20 million.
Yes, a Tier 1 Regulation A plus is capped at 20 million. It's generally not used for conventional offerings unless by a bank because the effort involved in doing the blue sky filings that are required for Tier 1 is a pain and expensive and time consuming. But there are going to be, I think, a number of ICOs that do Tier 1 that are happy with less than 20 million in their raise. So again, I don't want to take too much time here, but the point is that there are solutions for the issues. Not everything is completely black and white, but in our exposure through our securities attorneys with the SEC, the sense that we're getting is that they want us and others to do compliant ICOs, and they are interested in the solutions that we make, and they are suggesting reasonable solutions themselves that will enable these transactions, because the sense that I'm getting through this process is that they want compliant ICOs to prosper. They want companies to use this method when they do it properly. And I think over time we'll see them making adjustments to the rules in order to facilitate this, and I'll stop at that.
Jawad?
I was just going to mention that that I completely echo with what you're saying, Rod. We're seeing it from the FINRA broker-dealer perspective that the SEC commissioner basically said that he hasn't seen any ICO that doesn't fit the merits of a security. So we're seeing more and more of the clampdown. And the other issue is if you don't really pick your regulator, then everybody will have it at you. So from FinCEN to OCC to FDIC. So you might be better off picking your own regulator, as Rod said. Go through a security route, then at least you're working with a very known quantity.
What do you mean, pick your own regulator?
Pick your own regulator.
Can I have one in Zambia?
In the US.
In the U.S. So in the U.S., you pick your own regulatory body. So you pick the SEC. SEC is actually the most evolved of these agencies. And they're
actually not bad guys. They actually want to see entrepreneurs get money, right?
Absolutely. And as Rod said, that they want to see compliant ICOs. It's a wonderful, one of the best capital formation tools we have seen in the longest time. So.
Right. So the reality is that most ICOs do not happen in the US and now actively restrict participation by the US. So they do their KYC and AML procedures, but they are actively restricting the United States. So if you look over the landscape of ICOs that have been done so far this year, which were about 234 or so, and they raised about 3.7 billion this year, you'll see that 40% of this money was raised by the top 10 companies. I would just encourage you to just check out those, participate in those. A third of those are infrastructure investments, so to actually build the platform. And when we say ICOs, it's very important to understand that ICO is a terrible, terrible, terrible marketing term, right? So it tries to relate it to IPOs. They're not IPOs, and not one single ICO is the same as another ICO, which means an ICO can represent creating a new currency. And it's the only purpose of it being a currency, or it's creating a new protocol, or a lot of those are trying to pre-sale services that they're building. The low-hanging fruits to look for here is companies that have already something that resembles a currency in their system, i.e. if you look at your frequent flyer mile system, right? It's a virtual currency. If you tokenize that system, you're just adding a function to it. So those are potentially very, very successful ICOs, where they already have a function from the get-go, where there's no question whether or not the SEC is going to move in and calls it a security because, hey, I was trading it yesterday, I was calling it points today, and tomorrow I'm going to call it tokens. So you're likely going to be on the safe side. That said, ICOs that go out today should simply not pick the United States due to its uncertainty. There won't be certainty for some time to be had in between the different governing bodies.
You mentioned, Chris, you mentioned that a lot of the ICOs, initial ICOs were out of the US, right?
Yes, mostly Switzerland. Specifically, the large ones have been done there. If you look at the top 10, I think 60% of those have been done out of Switzerland. They are based there.
Rod?
Yeah, I want to add to that because Chris is thoroughly immersed in ICOs and is conducting them and has done a number of them already. We're in a different situation because we announced our ICO program 3 or 4 months ago. We had already had some discussions prior to that. So what we're seeing is companies that are further along, in many cases, that are quite well established, that want to do ICOs in the US. They want to be securities compliant. We have that pathway, if you will. And the other thing, which is a very new development, is that we're seeing some platforms from outside the US that are approaching us. That is to say, ICO funding platforms from outside the US, approaching us to work with us to take some of their ICOs and make them securities compliant by utilizing our services and partnering with us for that. These numbers are always going to be a small portion of the whole because of the effort and the cost involved. And that actually is helping us a little bit. I was worried that we would be inundated by kind of flaky little companies that had nothing but a concept on a napkin and thought it would be easy to raise $100 million. That hasn't happened, and what we're getting is quality companies.
I got a really hard question for the panel, and you guys can all pitch in on this. I attended the Start Engine conference on ICOs in Santa Monica, and a guy stood up and said, I lost $3 million, my thing got hacked, anybody help me? And I had lunch with a guy that had his money, he had $300,000 in a wallet, and he said, I can't figure out how to get the money out, and I've tried for 6 months, I can't get it out. And the other guy at lunch said, well, yeah, I bought it at $7,800, and the day is $6,300, and now it's like 11,000. And so you have a digital currency, if you will, that has the potential to be hacked, fluctuates tremendously in value. I'm asking you why, if I have to do a securities offering in order to raise funding from people and promise them some return, why would I want to use coins instead of money? Who wants that?
Well, all of us do.
Yeah.
I think Chris should start on this. Yeah.
Okay, so fundamentally, all cryptocurrencies are basically bearer instruments. So they're no different from the piece of paper you have in your pocket right now. So if you put this into a safe, you lose the key. It's the same situation that you have electronically. So that's one big thing to understand. The other thing about security is, yeah, you don't want to store larger amounts of cryptocurrency in what's called a hot wallet. So a wallet connected to the internet. You can just store it on a hard drive. You can just leave it unconnected, sitting on your desk, put a sticker on there with your personal key to that wallet, and that's it. It's unhackable.
Well, wait, let me stop you right there, Chris.
Sure.
If I've got all my material on a flash drive or hard drive or something, and I know that I plug it in order to access my account, there has to be something in the account that says, yes, that's Gene. In other words, there is something in the central
it doesn't.
currency.
No,
No?
but no, by definition, there's
not it?
no relationship to you. The relationship is just to the wallet and to the private key,
But how does the
not
wallet
to you.
verify that it's me if it doesn't have something in it?
If you
that
lose a
says-
$100 bill on the street, someone else picks it up. That's the end of the story. It's the same here digitally.
Okay.
Let me add one more item over here. I think, Gene, your question was like, why are people investing in coins versus
Yeah.
fiat currency?
Yeah, it's all squirrely all over the place. You get hacked and everything.
Well,
Why?
I think you gotta step back and look at the actual ICO as a capital formation tool.
Right.
This is the first time that we know of that people in Zimbabwe, the country you like, actually can invest in the in a growing enterprise in the United States or anywhere in the world. Even in the U.S., before the Jobs Act, people were not allowed to invest in these because they had actually no mechanics to do that, no mechanism
No
to do that.
mechanism, right?
Yeah,
Exactly.
and their current fiat currency has probably 40% inflation rate. so-
Exactly. So if you think about it as a capital formation tool, this is unprecedented, and it allows you to tap into global demand for your product, your services, or your altcoin. So from that perspective, it will stay. It needs to get cleaned up. And then the second question is, when you do take the actual coin, how do you protect it? That's really why, as Chris mentioned, that really storing it and really protecting it is an opportunity for the new ICOs and the new enterprises to form.
I wanted to take even a further step back and say, well, what are people investing in when they invest in a coin offering? Why do some people call it non-dilutive equity? And what are the benefits and the risks? When you purchase a coin in the stereotypical ICO that's going on now, you're not getting an equity interest in the company. What you're investing in is something that will be used in the stream of commerce around this company. And if the company becomes successful, they're saying this private currency point system, reward system that we have is going to become so popular and it's going to become the industry standard. People are going to want to be using these tokens all the time. And we're going to sell them to you at a discount now. And when we become successful, they will be valuable.
So you're talking about selling a utility token.
No, actually, this is a security token because the investor is still relying on the company becoming successful
And
the
hoping
efforts
for
of
a return.
and hoping for a return and a gain. But it's not a piece of the company's earnings directly. It's a participation in the stream of commerce around the company.
Appreciation of the thing that you purchased.
Can I add to this? Oh, I got the microphone in the right place. So two things. One is we on our platform, we have integrated acceptance of cryptocurrencies as a payment method, digital currencies. So a conventional Reg A+, a conventional Reg D is now capable, if the company chooses, to accept payment that way. And of course, we could, for conventional offerings, we think dollars, the companies think dollars. They're afraid, some of them, many of them, about fluctuations in digital currency value. So we convert immediately as we deposit into escrow or to a secure wallet into US dollars, so that they know what they're getting. If somebody's investing $800, they're getting $800 worth of shares in a traditional offering. So we're doing that right now, and that is providing access for our companies to the 300 million people in the Chinese middle class, or at least those of them that have a cryptocurrency wallet and want access to great US companies. So that's tremendous in its additional scope of reach in a cost-effective marketing campaign. But going on to why an ICO from a company's point of view, we're talking to some really good companies. Some of them have kind of boring tokens. And as I was saying to Chris earlier, I'm enjoying helping them develop better concepts for their tokens that will have legs, that will work really well. And we have a concept that we're fleshing out for Manhattan Street Capital. And it's so good. I would do it if it was for free. I would do it if I couldn't raise a penny from it, because it's going to add so much scale and reach to my business. But by the way, I think that we'll be more successful getting those tokens out in the hands of the people we want them in by raising money through an ICO than giving them away free. at the moment. I can't say that's always going to be the case. That's why you do it. It's because it's a way to raise money, of course. People see that. And it's a way to rapidly extend your business. It may be the focus, the entire focus of your business, if it's a blockchain-centric business.
Now, Sarah Hanks, we all know Sarah Hanks is a fabulous attorney, and she has commented that she has seen very few ICOs that are not securities. Charles, what's your opinion on that?
Well, this has been a matter of a lot of debate recently. Has anyone here ever heard of the Howey test?
Yeah. Yeah.
This is something obscure
Too
from
much.
law school and conversations among securities lawyers that suddenly become out in the marketplace. This is what distinguishes something that is a piece of ordinary property from a security. It's the test developed by the Supreme Court a long time ago to distinguish an investment contract from just an ordinary interest in, say, an orange grove or something like that. And that is, are you relying on do you have an expectation of profit, and are you relying on the efforts of another to provide that profit or gain to you? And most tokens that are being issued, whether they are expressly saying it or not, are trading on the idea that they're going to go up in value. That's why you're getting people to buy them
So
now.
what's important is to hone in on the expectation part, because that expectation part is on the side of the buyer. So the current buyer situation really looks like this. You can only partake in an ICO if you already have a wallet, right? So that's your starting point. So what we're actually seeing in the ICO market is the contributions are being made by people that have been in the space for some time. So you got mining operations, so the coin mining operations that partake. You've got people that bought their currency, their digital currency, a few years ago, or even at the beginning of the year, and they're now playing with the house's money. So the crowd sale in an ICO is really the most uninteresting part to the ICO drivers at the moment. That's maybe 5% of the new money that's coming in because of the hurdles that you actually need to create. And so I encourage everybody, try to partake in an ICO tomorrow. Create a wallet, get some Ether, and try to buy just $10, $100 from any ICO. You will see it's rather difficult. And if you're in the US, there's a 90% chance you cannot participate, period.
Yeah. Just one more comment I want to add to your point. I think, it is very subjective in terms of the intention. I think the issue is going to become as a lot of these ICOs are going to go into litigation. I mean, we saw with Tasers. They did an application token.
The SEC just launched a probe into several others recently.
Exactly. And then, one of them actually got stopped yesterday. But Tasers is actually an interesting one because even though it's not a securities token, the grounds they got sued on by the plaintiff lawyers is securities violations, not only at the federal level, but also at the state level because they didn't have the blue sky exemptions. So you can actually say anything you want to say, but at the end of the day, when it's going to go to court, that's really what they're going to use against these issues.
It will never go to court. It's a Swiss foundation.
Here's a tough question. Charles, what happens if I have 2001 investors in my ICO?
You're asking Charles.
If they are a
Charles is
security
right.
and
Even if it's not if it's a security,
if
of
it's a
course.
security
obviously.
and they're holders of record, which I suppose in the blockchain, well, people are thinking that a blockchain will be like a DTC position where there's maybe only one record holder.
Book
And there's
entry.
2,000 people.
Book
But if
entry,
you
yeah.
had record holders, you would theoretically have to become a
gotta
Section
do
12
it.
reporting
You
company.
got to do an
10Ks.
S1 and
Wow, sorry.
subject to certified audit and everything, right?
Or you do a Form 10, which is, okay, I've got too many holders now, I'm forced to become public, and you do a filing that gets you into
Right.
the
So
10K,
if I do a
10Q
if I do a
reporting system.
506C, which allows me to generally solicit accredited investors, and I have 2001 accredited investors, then I have to become an S1 registered publicly traded company, that's reporting company with doing audits and everything, right?
That's correct. I mean, the alternative view is that maybe these are commodities and not securities, and then The reporting requirements would not be the same, but you do have to have public information.
So
and-
let me just add to this. The point is there are solutions. We did a webinar recently where Sarah Hanks and I spoke to these exact issues. And afterwards, I got great feedback. But the only negative was one of our companies that's in our pipeline that's doing a Reg A plus. They got cold feet because they watched our webinar because we were so descriptive and clear cut on what the challenges were without describing the solutions. My point is there are solutions. This is a Section 12G problem. There are solutions even for a Reg D 506C offering. So don't let us, pour so much cold water on the prospect of
Yeah, we'll try
success.
not to
I-
show
I
this
agree.
video to anyone, Rod, okay?
Go ahead.
We got questions here. Can we get the mic for questions from the audience?
And
A gaming company that wants to do an ICO.
correct.
Okay.
Right. And the funds are actually going to be, your participation in the ICO will be a proxy for a virtual currency that you will be able to use in the gaming environment.
Yeah.
A game that still has to be developed. Would that be an example of a typical sort of use case that would not be deemed a security?
And that's actually the stereotypical example, yeah. And this is essentially where all virtual currencies came from. I mean, virtual currencies, it's really nothing new to those in the room, probably not too many that play online games. They have been around for quite some time. They have been traded since the late 90s or mid-90s by now. You could buy the virtual coins that you get in a game on eBay in the mid-90s already. That's always been the case. So in that scenario that you're describing, that's the best scenario you can have for a tokenization process. You still want to avoid all the regulatory issues, nevertheless, because there is no regulatory guidance clearly. You got 4 different bodies making 4 different noises, unfortunately. So you want to put this on solid ground and do it someplace else at this point in time.
There are those who are suggesting that we should be calling these TGEs, token generating events,
Yeah.
rather than ICOs, because ICO sounds like IPO and it's almost an admission that something's a security. The fact is, all of these schemes require something to get the tokens into the marketplace and get them in use, and that doesn't necessarily mean that they're a security. or
You don't have to
securities
do
offering.
your ICO, right? That's
Right.
just the marketing part of it. You can create that token right now, right? It's very easy if you're just doing an ERC20 token on the Ethereum platform.
Right.
We'll take a
So
typical developer.
Let me
day to day.
add to this because there are some materially important factors here. If you are raising money by selling those tokens and people are buying them because
got
they
taxes.
expect that they will go up in value by the efforts that you put into this business, now you've got a security. At least that's what the US view is. And if you are, and it depends what the exits are for the people that have those tokens. If they earn the tokens and then they can get, a free ticket to a movie after, a few months of playing a game, then it's clearly not making them a fortune financially. But if they're able to earn so much money that this becomes like an investment, then you're probably best off treating it as one from the get-go and doing it as a security.
And if not, if
In
it's
the
just
US.
the sale of a token, of a true utility token, and it's not a security, guess what? The company has to pay taxes on the sale of those tokens.
Exactly, because the only reason why you would not pay tax on a $40 million ICO is because it is security that allows you basically the ability to pay taxes on the capital gains. But if it is a utility token, applications token, nothing different than selling toasters. You sold $40 million of toasters, you pay taxes in $40 million.
Event, but
I'm still concerned about the escrow, Rod.
I noticed
If
that.
if
I
I'm
noticed.
a company and I'm trying to do it all internally, and I'm holding the coins and everything, I'm taking money. I'm not really escrowing it. I can't escrow something myself, can I, Charles?
The truth, but I want to actually touch on something else that I think is very important in this because we're a little bit down in the weeds dealing with real issues here, which is appropriate. But another big factor is that some of us, and including me, that are contemplating what can be done, what will be the result of the blockchain, of the creation of this blockchain approach and method. To me, it's really, really exciting, the potential here that we're going to see a step up in the rate of innovation and a step up in the amount of impressive things that can be done, the improvements in security that can be delivered, you name it. There's so many marvelous things that can be done. People thought the internet was, I got a phone call in 1993 from a well-known and successful VC asking me if I thought the internet would persist. To me, it was an absolute no-brainer at that point. And it's, you know, I still wonder about that call. But that's a similar situation here to me. We are going to, I believe that this industry is at its early stages of gestation, actually. It's going to become very, very significant. So that's another reason to involve oneself in it in some form or fashion.
And we all remember the guy in the 60s, the IBM guy in the 60s that said, why would anyone want a personal computer?
Yeah.
Right. Or a computer at all.
On the technical escrow point, just to put a button on it, the overarching requirement is if you have a contingency in your offering, say we're not going to close this offering unless we could raise $5 million, $10 million. There's a requirement that you not put that money in your pocket or in the company's pocket if you're telling people it's refundable. And to be SEC, refundable means not in a company bank account where it's subject to the claims of creditors or subject to risk, something separate where you can actually give the people money back. But if you're not a registered broker-dealer, you can satisfy that in any number of ways that are going to give the investor assurance of getting their investment back.
Well said. Thank you.
One item I think, Charles, you mentioned about the way that the tokens are issued. I mean, typically you have the tokens issued that do not actually have any sort of corresponding interest in the LLC or anything else. We're seeing that change quite a bit. We're seeing actual equity in the LLC or the actual entity being tokenized. So the reason why it's important is that that's going to lead to a whole new dimension of capital formation and how these tranches can be structured. So, we're really excited from a broker-dealer perspective in terms of capital formation. So we believe this is just the beginning, and we're really going to see a lot of exciting developments, not only on the financial side of it, structuring, but also, of course, the technologies that these companies and enterprises are developing.
The last 2 times I've spoken at an event like this, and I'm sure the other panelists have had similar experiences, the SEC and FINRA had people in attendance listening, wanting to know what's happening and how they can develop a regulatory scheme that will not stifle this type of capital formation, but will protect investors.
I had a short conversation with a traditional banker in the lobby, and I said, be sure and see the ICO conference. He says, oh, ICOs, yeah, I heard of those. I said, what do you think about Bitcoin? I said, well, what do you think about Bitcoin? He said, I think it's a scam. He said, I think it's the biggest bubble to ever hit the country and this and that. So there is a psychological belief in a large number of the traditional investment bankers and people that are in the financial services. There's a psychological bias against it. How do you think we're best going to overcome that?
By booking on Expedia using Bitcoin right now?
Yep.
You can buy a ticket right now on Expedia.
But
Using Bitcoin, you can buy Amazon gift cards. Basically, you can buy everything with Bitcoin. You got a dozen Bitcoin ATMs here in Los Angeles.
And see it go up a couple thousand, and you'll be a firm believer, right?
Yeah.
basically, we have to deliver, right? As an industry, we have to deliver. It takes time to show proof.
Then let me ask you a question. What would it take for you to recommend Bitcoin as an investment or any of these types of offerings as investments? What would it take for you as a registered investment advisor under all kinds of rules and regulations and know your customer and all these sorts of things? You can't I know for a fact you can't recommend things that are squirrely, right?
Correct.
And so what would it take for you to recommend these types of offerings to your clients?
Well, the first thing it would recommend that it would take is for me to be allowed to do that and charge my clients for being able to. And I don't know if I have that option today, either buying Bitcoin or Ethereum or one of the others directly, or investing their money through a hedge fund into cryptocurrencies.
What
So
would
where are
happen
we
to you if
regulatory
you
right now?
recommended Bitcoin at 11,000 and it went down to 6,000 and the client called up and said, wait a minute, you didn't tell me it was this squirrely, what would happen to you?
Well, you have to set the stage, right? You have to explain to the client what the risks are and what the challenges are, and it may well go down. But the bigger question is, where will it be 10, 15, 20 years from now?
100 million?
I think, just let me just jump in for this second. We're a registered investment advisors also, Charles, and thanks for hosting me at the show last month. I appreciate that. We struggled with the same exact issue on our RIA side, and the Bitcoin is actually just the tip of the iceberg, right? I mean, just look at the altcoins. There are 800 coins. There are ICOs, 100 plus ICOs, plus there are new projects coming out. So it's a lot more broader. So just buying Bitcoin for the investors is actually a disservice to them because they need to be exposed and given exposure to the whole industry. So a vehicle, more of a diversified vehicle in this industry, is more of a better route that we decided to go with, and we decided to create it, but there are some of the other ones that have done it. Neural Capital has done it, a few other guys have done a really phenomenal job. So that, for individual client, is a much better approach than otherwise.
Before we get
Is
run-
that legal, though? Am I allowed to do that right now? Would the SEC allow me, the state of California, et cetera?
Yeah, these are Reg D 506 offerings, so definitely you can.
Okay, thank you.
Well, gentlemen, in wrapping up, what do you think the future holds for this ICO Bitcoins? Why don't we go down the list? Rod, what do you think the future holds for this type of investment?
This type of investment, yeah.
Doing a Regulation A or small IPO or
As a
raising
compliant-
capital
as a
using
compliant
coin
capital raise.
offerings.
Yeah, I think that this is we'll see this gradually grow from a small base. It's certainly a small base right now to be a very viable and attractive funding option for ICOs that are US securities compliant. That's already happening. It's just that it takes time to deliver when you have an SEC filing process as we do for Reg A plus offerings. So to me, that's a note that is going to happen. It's going to become, because this industry, I believe, the ICO, the blockchain, not really the ICO front aspect of it, but the applications for blockchain are going to be very, very significant with time. So this industry is going to grow very rapidly at some point in terms of the compliant ICOs. It's already grown intensely offshore. And so I'm very bullish about that and very excited about the potential for it. Bitcoin itself, I have a theory on this, which is potentially unpopular, but on the one hand, it looks just like a bubble, and it may very well be, who knows? Certainly, I don't recommend anyone to invest in Bitcoin. It's a currency. What's happening at the moment, though, is that there is so much coverage out there, so much new exposure to cryptocurrencies, and in particular Bitcoin, that the demand for wallets is increasing. And what do people do? They buy Bitcoin and put them in their wallet, whilst the rate at which the miners are making Bitcoin is not accelerating as rapidly. So when supply is growing at a slower rate than demand, you see an increase in price. That's what we're seeing. At the moment, that's happening in a big way. And the more people are talking about how it's a bubble, that's reinforcing and increasing the awareness and knowledge of it. So it may be that this is the beginning of Bitcoin going up to much higher altitude of price.
Chris?
Well, blockchain is really neither an industry or just a technology, it's a paradigm shift. That's important to realize, with the ICOs being just a very small part and application on top of the blockchain, with also any currency being a very small part on top of this. There's much more interesting parts that are gonna disrupt every single industry. So also like kind of trying to shoehorn blockchain technology into fintech, that's the wrong idea. Everybody needs to understand that there's a new thing called blockchain economics. Everybody who doesn't understand these new economics will not be relevant in the future because it's start gonna displace everybody who is still using intermediaries, because we don't don't have the typical immediate problems that blockchain solves. We all have bank accounts, we all have credit cards. The immediate problems that it solves right now are in the developing nations. But what's going to happen is those developing nations, all of a sudden, they have the tools that we don't have. They won't be paying credit card fees. They don't be paying for certain services that blockchain provides, and or the fees are massively lower than what we have been used to and have been indoctrinated into this paradigm. Just like the same thing that you saw happening in sub-Saharan Africa, where every goat herder now has a smartphone, right? Now they all of a sudden also have an account. They've never stepped foot in a bank. They never will step foot in a bank. They will never own a credit card. They never have a need for a credit card. They never had a wire coming into their HUD. They all of a sudden had a smartphone. And now with blockchain, they have access to so much more technology. So that's where the disruption is going to come from. It's the decentralization of marketplaces that everybody needs to understand who wants to be relevant in the future. Fiat currencies do not have a future. They won't exist. And I encourage everybody, yes, put at least a small portion of your portfolio into a bucket of digital currencies, because all fiat currencies could go away very, very rapidly within the next 24 months.
Jawad?
It's okay. So
Too passionate?
no, it was great. Thank you.
That was excellent. At least the first 80% was excellent. The last part was a little bit of a big bite to take.
On HBO.
Yeah.
So, gosh, what were we talking about? So on the
future,
Bitcoin,
the future.
Yes. So I think let's just divide this between the Bitcoin and the blockchain, right? So Bitcoin, we have the Chicago Mercantile Exchange that's going to start selling the futures on December 18th. Nasdaq will do it next year. That will create a synthetic market on top of the Bitcoin that can go up to hundreds of billions of dollars, right?
And you can short it.
You can short it. You can take any position, right? And you'll
Edges,
actually have a
straddles.
counterparty to do that one. So that's one part of it, right? So the second part is a blockchain. As Chris mentioned, the blockchain economics and the fintech of the future that will be powered by blockchain would be revolutionary. I mean, we're looking at from an investment side and also the ICO side, we're looking at projects that are actually going to revolutionize industries like healthcare, real estate. So, if you look at the emerging markets, emerging countries where the real estate ownership can be pretty dicey, right? Who really owns it? There is really no system of deeds. So, what if you actually have it recorded in our blockchain? You tokenize the real estate. So, people like Brock Pearson and other guys, basically their mantra is that every real estate in the world is about to have its last sale, being tokenized, right? So when we are looking at those paradigms coming in, you look at share ownership, stock ownership. I mean, what better way than to use blockchain? I think that's really what we're looking at it. So I think this is a great tool, not only the blockchain that will kind of move mountains, but at the same time, we need to play by the rules. We need to pay taxes. We need to run it through as a security, even though we're doing it outside. But at the end of the day, we all know what happened to UBS and Swiss banks. They thought that they were outside the U.S. People that were opening accounts in Cayman, we all know what happened to them. I mean, right now, Cayman is absolutely open to the U.S. government, same as Swiss banks. So at some point, things will become streamlined. The sooner you basically streamline them, you basically are future-proofing yourself. So.
Yeah, and Washington, on that note, actually just passed a law so you can record your shareholders on a blockchain.
Yes.
Yeah,
Yes.
Charles?
Has to be.
Just to echo what some of the other panelists have said, this is clearly a technology that will have a lot of uses. We don't know exactly the form that it will take and how people will derive value from it. Some people have called the blockchain the Internet of Value, whereas the Internet we've had to date is the Internet of Information. This is a way that that exchanges of value, changes of ownership can be done without intermediaries, quickly, electronically, and I'm not a technologist, but supposedly in an immutable and unhackable register that's distributed and accessible to all. Whatever form it takes, and however people are going to find value from this, I would just want to echo Rod that there are ways to do it compliantly and you may have to be clever or use some ingenuity, but the regulatory system is not quite keeping up with the needs of this new technology. To date, the US regulators and now European regulators have been in a position of reminding people that the old rules apply, and that they're trying to fit the blockchain technology and the exchanges of value into the older paradigms. It will evolve, but if you have an innovative idea to make use and get value out of blockchain technology, you shouldn't be hindered by the idea that you just can't do it legally or that the regulations will prohibit it. There is a way to access the market, and there is a way to do it in compliance and cooperation with the regulators.
I'm very interested in the psychology of change. John Lasseter was once a hand-drawing animator at Disney. And one day the head of Disney dropped by the animation room and said, "What's new around here? What's happening?" And John Lasseter said, "We need to get some computers in here." And they said, "What?" He said, "Yeah, we can draw on computers. We don't need all these people drawing this, hand drawing these animation things." He got fired that day. And he went over and he started Pixar, the company that made Toy Story. People are very resistant to change. Don't change, you know, it's the joke in Hollywood, how many screenwriters does it take to change a light bulb? I'm not changing anything. So this new financial model is disruptive to something that we all cherish, our money, you know, and the financial institutions are very conservative. And so everybody's resistant to change, and that's the thing that you're up against here. And you have a very powerful model that's being introduced into the financial system. So what you're seeing is resistance on one side and excitement on the other. And I think the fact that the SEC is coming down on a lot of ICOs now that were not registered, and they really were investments, I think that's a good thing because it'll make everybody comply. Exactly. And once everybody complies with the rules using this new model, and the reason it took off, in my philosophy, is the reason it took off is it was unregulated and everybody was like free fall. And you can do it with basically anything you wanted almost. And now that the SEC is coming in, it's going to need to be regulated. And then the other thing is as Jawad said about the futures. I think that's going to really make everybody wake up one way or another because you can play futures on it, you can short it and stuff like that. And so there'll be a lot of interesting things happening as soon as that's allowed. So I'm getting the signal that we are going to get thrown out of here if we don't close up. And I know all of you have had enough of this. So thank you so much for allowing us to have this panel today. We really want to thank the Opal Group for this wonderful opportunity to have this discussion. And we hope we can do that again. Thank you all for coming.
Thank you.
Thank you.